We'll kind of get started here for just a second, kind of give everybody a second to get settled in, make sure my questions are coming through and that we do have a good feed started. And then I'll get down into what will hopefully be some helpful analysis for you guys that are trading over the course of the next 4 days. And then over the course of the next, let's call it about the next 5 months or so. I really feel that, as you approach trading, you have to have different time durations in mind, because when I give you, a certain setup or a certain price that I'm looking for, a lot of that will depend on, when are you looking for those targets to get hit. And I really think there are two distinct ways of approaching this market. The first of which is by looking at the witching expiration. So this does not happen, but only 4 times a year. And there are some unique nuances that go along with trading it that I think are worth paying attention to. The way that I have these charts set up, it will always show me any given monthly expiration. And you can see this dotted line that we've got here showing me the date extending out into the 19th lets me know that this is a monthly expiration. But what is unique about the June expiration is that you have single stock futures, index futures, 4 different products that all come to this point, and they're all going to be expiring at the same time. And when they do, it can just tend to create some unique movement in the market that I think there will be some really good plays to try and benefit off of. One that I'm kind of considering is SPY back down around 300. Now this would imply the same idea as the S&P is moving back into 3,000. So, I don't know if I love this idea, because I am trying to work with the outlook that the next 4 days will be more bouncy as a way of thinking, because we had so much volatility last week. So you get that kind of a pit bull low type action into Thursday or Friday, which is just enough to get people to panic into coming in and getting short, right? Because we had the move after the Fed, and when you get that big 5% down day, usually that's going to drive a lot of fear and panic into the markets. And off of that move, that's where people that are familiar with this concept will take that opportunity to sell put options or sell premium in general for the week of this expiration. So all of that came through from Thursday and then into Friday, and then today you can see Monday with a pretty decent reversal. I think that should continue to push us a little bit higher. If that starts to fall apart and we roll over into the end of the week, well, then that's when you start looking for more active plays around the 3,000 price point. More what I would have you focus on, and one of them that I think is the most interesting, is looking at Tesla. So Tesla is a relatively new stock to the 4-digit mark, just recently cresting the 1,000 and trading in as high as 1027.48. When we made this new lifetime high, the subsequent pullback, I don't think was anything outside of the ordinary. And then we had a very nice reversal this week. So a couple of ways that I would have you look at this if you are looking to actively trade it. One of my favorites is going to be coming in and selling the $1,000 puts that expire this Friday. So, for most people, probably looking at this as a spread is going to be your way of approaching it. And when I share these ideas, I'm usually going to start with the most basic premise first, which is, what are you trying to do kind of at the core of this? And that would be to sell the $1,000 put options. Now these are about $10, $9.10 as of today's closing, but they are in the money. But you're trying to sell those with the idea that if we can get direction right, well, then we'll also get the decay of these options to come through. So I like selling those through either a short put spread, or you could get creative and do something like an unbalanced butterfly. I'm going to cover more of just standard chart setups with you, because I think that will probably be more beneficial to most of the people that are viewing this. You can do it anywhere from just your basic stock pick. We'll get into some verticals or other things of that nature. But just this one for the witching expiration, I think you could also look at ideas like putting on unbalanced butterflies. These are one of my favorite strategies. And the whole idea with this play is that you will be leaving it on until probably about Friday afternoon. And the way that we can set it up here, if we're just looking at some rough pricing, these prices will fluctuate a bit when you get into tomorrow's open. But if you look at the $10 wide unbalanced butterfly that utilizes the short $1,000 call, it's going for a $4.20 credit. What this implies is that you could make $1,400 while you only have $600 at risk. So I really think when you think about that type of risk reward, that this is an idea that, to me makes good sense. The last thing that I'll say that, hopefully helps drill these ideas home, or at least what we're trying to accomplish, is to think about what the $1,000 put is worth. Like, let's just use this moment as an example. And let's say that instead of being Monday afternoon, it is Friday afternoon, and the markets have closed for the week, the witching expiration has passed. What would the $1,000 put be worth in that moment, right? If everything was closed and settled, well, that put option would be worth $9.10, because that is how far in the money the put option would be. Okay, right now when we're looking at this pricing, they're trading at $31.15. So what we're trying to do is sell that kind of, juiced up premium, and then look for it to contract as we get into the end of the week. The premium in and of itself will help this spread come in, and then if we can get the direction right as well, then that's just going to be that much better. So Tesla's been hot. It's definitely in play, and I think if you keep an eye peeled on that one for the $1,000 price point on Friday, I think you'll be able to make some cash with it. So I wanted to cover that one. I've got a couple of additional daily setups here that I think are really quite clean, and I'm going to start off by just doing my favorite 3. Now, this is what I was kind of alluding to, that during this week there are a lot of nuances that you'll focus on around trading expiration and just, kind of the details of that, like we've done with Tesla. Then there are going to be these other types of setups that I think they do well, kind of regardless of what we get into. Now, you do want to be a little bit careful once we get through this Friday, because once the witching expiration passes, the chance for increased volatility is there, which is just to say, market makers, the hedge funds, the powers that be, will let all of this premium contract, decay, let all of these contracts expire for this Friday, and then you can see a lot of volatility hit on Monday, Tuesday, Wednesday of next week. Seasonally, next week is kind of bearish for the indexes. So do keep that in mind with the idea of the drift higher into Friday. Maybe we get into some volatility next week. But all of those disclaimers out of the way, you've got some really good looking setups in the likes of names like Twilio. And these are one of my favorites to follow through, because you've got a lot of, even if we hide our studies entirely here, and you're looking at it off of one single premise, this is something that I really like following up on, and that is companies that crush their earnings reports and looking for continuation from that. So just off of this very plain chart, you can see that there was a very large gap. Okay, well, what causes the gap? It is caused by better than expected earnings. So the company has this excellent move. You can see they grind higher for about a week after that, and then they spend some time consolidating. It can only consolidate for so long, and then it's going to be repriced. I like thinking of it in the way of saying, here lately and for about the past month, Twilio has been a $200 product. But over the course of the next, let's say somewhere between 2 to 6 weeks, Twilio is either going to be a $220, $230 stock, or it's going to be $170, $160. I am of the opinion that you want to take that earnings beat, you want to take this consolidation and play it in the direction of trend. So a couple of ways that I'm looking to kind of put some cash to work here is by selling the $200 put that expires this Friday. Same concept, or if you just want to drill down to what is the focus, we'll just sell the 200 put naked, because that is the core idea, is that is by this Friday that we are above 200. If you want to do that as the unbalanced butterfly, as the vertical, however you want to take advantage of it, I think that psychological area should find support. And then for the other ways that I'm pursuing this is by going out into these July monthlies and picking up the deep in the money calls. So the 185s are a little wide here, but I think this is a position that you could build into this week. The way that I look at my options trading and the way that I encourage anybody getting into it to give it a shot is to define your risk by the money you put into these options. So I'm not looking at a stop necessarily. I'm looking at the idea that it's going to cost me about $2,300 per contract to see what Twilio will do over the next 32 days. And I think that those are the options that you're pursuing, acknowledging that risk, and then looking for movement up into about 230. I wanted to show you the very basic chart, which has the big gap up, the continuation, and then what I think is the the consolidation, and then the potential for continuation. And if that is something that we can get through, or if that is an idea that you like, well, then it coincides very cleanly with this daily squeeze setup. So if you're familiar with the squeeze, it is the #1 indicator that I have studied throughout the course of my trading career, and I continue to find it to be incredibly helpful. But it's just the idea that this compression can only last for so long. Eventually, it is going to move into the next range that it will be trading, and I think a target of about 225 on that should serve you well. Now, hey, yeah, good afternoon, Vinny. Thanks for joining us for a little chat here on Facebook. I feel kind of unique. My schedule's been a little bit different today than what I typically do on a Monday, but really active markets, and I think a lot of opportunity over the course of the next couple of sessions. Another name that we have been involved with through the chat room, and like I said, I've got 3 of my favorite picks here for you. Then we'll see what you guys are trading and what else may be setting up into the end of the week. But the second that I wanted to bring to you here was Peloton. We've been working this one in the chat room for about the last 3 weeks, give or take. We also had the trade for the run into earnings, but really the more relevant kind of current discussion is the exact same thing. And that is to say, look at this pattern where here you had the squeeze that led into the earnings report. And then when Peloton reported earnings, look at this nice gap higher on that move. Okay, from that day, you have a little bit of sideways trade. It kind of chops around. Look at the wick on the day that it came back to fill the gap. So you can see this candlestick right here. This was formed on what would have been May 27th. So on the 27th, it has this dip down. And I think that even very basic technical analysis would have you look at this and say, keep an eye on the gap fill. All right, it comes back and fills the gap. But then this day also has a very nice close. It forms a nice bar. I often look for, or explain it as, looking for the syringe effect. Do you see how that piercing down below of price action creates what looks like a syringe? And then when you close back up near the upper part of the range, that tends to be a decent reversal. So we've been pursuing that idea from there, trying to work with general strength in this product. And, you don't have to take my word for it. Look at the signal. This began forming on the 3rd of June and is just now seeing resolution. So, here again, we've been involved with this one, and we're going to continue to keep buying more of it. But if you're just now getting started with this, I would encourage you to think of it in the same way, which is to say, for this Friday, try to think theta positive. Try to think about something that you can sell that will gain value, that you will benefit from over the passage of time. That is to say that I think selling the $50 puts is what you focus on here. So there again, we came into today short the 45 puts. We've been buying these calls further out, and today was kind of a good day for Peloton. This is how you try to be involved for those types of moves. If you're looking for fresh exposure, and I'm going to be putting these on tomorrow, and that is to sell the $50 put. Now you sell the $50 put only if you are willing to take assignment of the shares. The way that I think of it is that if I could buy Peloton at 50, okay, I like that generally well enough. But if I can make money with the passage of time and not have to take the assignment of those shares, well, then that's even better. And then you try to take that credit that you pocketed from the shorter duration option, and then you turn around and take that and pay for the further dated calls. So I think that this could be a very viable trade into the end of the week. Also notice that you're going to see more of these situations where there is potential for pinning. Now, to be clear, I am focused on the bullish side of Peloton, but you'll also notice how there's a large amount of open interest in the $50 calls. Sometimes these can act as a little bit of a weight on the stock, where you do the same thing. You let it get through that week of kind of, people chasing it in all directions, then let these next 4 days kind of chop around. Maybe it trades around 50, and then we can start to really see the move into next week and the week after. So, like I said, just sell the premium and the short dated options, buy the calls a little bit further out, and I think that will help you in that daily squeeze setup. Yeah, no kidding, Corey. Last week, I've been doing this for about 13 years now, and even now, every day, I tend to be fascinated by it, just because, you wake up and you have a pretty general idea of what it's going to be like, but there's always little nuances and just things that keep you on your toes, and it's part of what I truly enjoy about this vocation. So let's look at the third, Nvidia. And I've been going back and forth with Nvidia for some time. You try to have a list of stocks. I usually encourage traders to have a list of 21 or a list of 13, just because I always like Fibonacci numbers. So I'll try to think in terms of, 13, 21, 34, that type of thinking. And the mention of 13 and 21 is just that you don't have too many stocks, that you're kind of watching a smaller batch religiously, and you get a good feel for how they like to move. With that in mind, I've been watching Nvidia very closely, and I feel like you've got analysis that is very similar to what we shared in Peloton. So a couple different graphics on this chart, and I'll try to be clear about each of them. But the reason why I begin bringing it to you, and why I'm even interested to begin with, is because of the daily squeeze. So you can see here in this histogram, we've got 3 bars of this signal which is forming. And even if you're not familiar with the squeeze, even if you're just looking at this from a very basic technical perspective, do you see how these 3 names that I've brought you all have exactly the same theme, at least these favorite picks? That is to say, look at this Nvidia earnings date, right? Well, and I guess in this one it was slightly different. I'm looking at the gap here, but you get the nice gap. On earnings, we actually pulled back to fill it a little bit and then some, but it's really just to make the point that I feel that once you got that gap and you moved up into 350, this has all been very sideways. If you're watching it on a 5-minute chart, sure, there have been some volatile swings, but when you step back and look at the big picture, which direction is Nvidia going? If you need help with that, step back and look at the monthly chart, right? No stranger to corrections, of course, but I just feel when I look at that pattern and I want to try to participate in the path of least resistance, I feel like that is directly higher. So I like the idea that this consolidation inside a bullish trend, backed by a daily squeeze, backed by a good daily close today, I feel like we're destined for a target of 400. And honestly, 400 is very modest. Now, when you do these broadcasts, you try to think, well, at what degree would you consider yourself wrong? Or what type of stops would you use on the position? And it's really the same advice, which is to say, I will not use a stop in this because my option strategies will have defined risk. And then if they don't work out for that particular expiration, then I will deploy them again. I wanted to show you another concept in this chart that I really enjoy for my technical analysis. Sometimes it can be a little bit of a tricky one to learn because there's so many instances of it in a chart. But notice how when you zoom in on this, you've got an area right here where I've got 100% and it lists a price of 348.31. Where is this level of support coming from? Well, it's coming from previous declines in this stock. So what I'm doing, and you'll see that there are several of them, right? There are several at lower prices. And that's what I was saying. Sometimes it can be kind of like, oh, it'll break one, but then it'll hold another. But I still study it quite often because I enjoy comparing. Like if we activate this area of symmetry, do you notice how it puts these little dots? Like now you can see that this one, or there's a square on top of this drawing tool, and then there's a square right there. What this is doing is measuring the price point decline in dollars, and it's saying, okay, throughout the course of this 1, 2, 3 day decline, Nvidia gave up so many dollars. Okay, then we move forward in time, and notice how this is a 1, 2, 3 day decline that was for exactly or almost exactly the same dollar amount. So that's all that 100% is doing, is saying if you repeat that type of a decline, this is the price point it would take you to. Okay, so now I'm working off of support at 348.31, and Friday's low was 348.13. So, you're talking about a couple of dimes in a $350 product, and I think that does help provide an edge. So I'm going to continue to pursue Nvidia to the long side of that same way of thinking, where for the next 4 days, it's kind of a choppy to upside bias, but then, and it'll be easier if the market can avoid any, drastic turmoil. But if it continues to do well, the target up there at 415 is next. So old highs of 380 for the first target if you're looking for more of a scalp or a quicker trade. And then we're going to move into the psychological area of 400, and then the next technical target at 415. So I always like to think that if you attend these sessions, you're going to walk away with at least, 3 actionable ideas. And in this case, we've covered 4. The first of which is the pin in Tesla at 1,000. It's either going to pin at 1,000 or it's going to be above 1,000 on Friday. And from there, you can either do the iron flies, the unbalanced flies, or the short put spreads that involve the $1,000 put. And I think those will be good trades. Then the other 3 are Twilio, Peloton, and Nvidia. So, take those as notes and spend some time going back looking at your trading plan. And, obviously if you're in the chat room with us, we're going to be looking at some fresh butterflies and other ways that we can participate in those. But I think that those will be some good swing trades over the course of the next couple of weeks. And I wanted to bring them to your attention. Now, if you've got any stocks that you are looking at, please let me know. I can throw them up on my charts and see if there's anything revealing or anything off of my analysis that may complement what you are looking at. Otherwise, there's a couple more that kind of fit similar ways of thinking. And I wanted to show you what I think are kind of another chart where it's a little bit mixed. And I kind of put the ball in your court a little bit as to what you might enjoy trading on this. But MU is a name that I'm looking at for the potential of a run into earnings. And yeah, thanks for Etsy, Chris. I will take a look at that for you as soon as we get through this MU thought. But I'm thinking with MU, it might make sense to come back and look at some of this past data. And if you guys know Ophir from the CML Viz tools, he's a guy that I've really enjoyed working with for the past several years, and it helps me answer the question because when I would bring these types of thoughts to people, they'd say, well, what type of, a lot of people will ask about a back test. I have often not been that interested in it because I feel kind of forward testing sometimes because, every moment in time is unique. But with that being said, look at this back test return and what it's doing. This is sorted by, they kind of run through MU and they say, what are the best performing strategies in this particular symbol? And I'm not so much interested in the top one, though it is very good. But look at the next 3 things that come up. The next 3 best performing strategies are a 14-day pre-earnings technical momentum long call. Then you have a 3 days pre-earnings, and they're kind of the same thing. So what this is showing you, and I bring this to you because MU will report earnings in 14 days. Now granted, the market is closed now, but you can put these to work tomorrow and try to take advantage of the same thing. This just shows us that this is one chip name that tends to have a bullish expectation into the numbers. It makes no estimate off of what the actual numbers themselves will be because we're going to be out of those positions entirely before that happens. But I find this to be so interesting because it's telling you 14 days before they report, you've got good bullish momentum. Then it confirms that or almost amplifies it by also pointing out the 3-day momentum long calls. So I've been working on picking up some bullish exposure going out into those further dated picks. I've started this idea here with those 32-day out options. And then depending on how this name performs, I will ramp up my exposure in the 3 days prior, right? Start the position now and see if the rising 50-day moving average can give you some buoyancy into that earnings report. Then if that does start to take shape and starts looking good, well, then you can ramp it up and take more exposure in the 3 days before earnings. And I think that you'll have some good opportunities to kind of, if you can get direction right and you can also get the implied volatility around earnings right, you have the wind to your back and it can really create some good gains. So think about that in MU starting from tomorrow when the market opens up into the Monday when they report earnings after the close. And I think you may find some opportunity there. Also wanted to take a quick look at Etsy. So Etsy, the only problem that Etsy has is it's had so much so fast. And, I feel that way when I see a product that was trading at $30, back here in March, and then it's had this ramp all the way up into 88. So that's a huge percentage gain, right? And that's very beneficial, of course. If you're trying to look at it from the buy side, that's what you want. But with such a big move, it's going to take some time to digest it. So when I look at the squeeze, this looks perfect. There's nothing wrong with it. But what can sometimes be frustrating is getting the timing right. And ultimately, I don't know the exact day that this one's going to take off, right? It might do it tomorrow. It might take weeks. What I would have you focus on is the rising 50-day. Right? It's the same concept that the trend is good. The consolidation in this sideways trade should be generally beneficial and given enough time should resolve to the upside. But you're sitting there chopping through this mess thinking, what's going to be the catalyst? It could be news. It could be, throw a dart. That's what I'm telling you. I don't know. It could just pop. But the other thing you want to watch for is that rising 50-day. As I zoom in, you'll see this is the dotted line that has a very nice angle to it. A lot of people will study moving averages and say if it's above or below, and kind of that's all they'll look for. But really the angle of it, do you see how that the 50-day simple moving average is just almost moving straight up? I'm going to look at that as generally being beneficial, and what you want to see is that day that the 50-day moving average catches up to price. And that's when I would try to, that's when if everything comes together perfectly, well then maybe you got a chance to buy the low. If that doesn't happen and you don't get down that deep, well then you just hold as much bullish exposure as you can tolerate and not get shaken out, right? Because truth be told, you're kind of at the upper part of the range right now. So if you buy it with size tomorrow at 85, and then you have, can you tolerate a pullback to 75? Think about it that same way. Be bullish in this, but I wouldn't use a stop. I would define my risk by what I could tolerate, because we have that ability in the options market, and then just see if the trend can continue. I'm the very last person that will ever look at stuff like this and say, it's too high, right? There's a certain group that just, I think, loves being contrarian, and I just don't, think about if you would have been doing that in DocuSign. Look at just this amazing parabolic type move. But for how long have people been arguing, it can't go any higher? I'm going to be that person that tries to keep pushing it in direction of trend until I'm just, plainly and obviously wrong. And then when that happens, ideally I've made so much money following the trend that the little bit of the give back doesn't bother me. But pretty good looking chart. And, I kind of like the company too. Not that my opinion on that matters. We'll look at ZS and Team. Apple doesn't do a lot for me. I appreciate the requests and you guys being more interactive in these Facebook chats. It does make it a lot more fun for me too. I don't know what to tell you in Apple, right? I'm going to start off with those 3-4 that I really feel like I've got some good setups in, and then I'm putting my cash to work in. Apple, for lack of a better term, I think is dead money. I think you're going to chop around for the next 4 days, and then if the market declines next week, watch Apple for a big fall. That is pure speculation, because as the trend follower, it's obviously been trending quite well. But I think you're going to wake up one morning and Apple's going to be back at 300, and people are, that's just my opinion. But outside of that, I'm not shorting Apple. That's the other thing to be very clear about. I feel skeptical about it. I feel like you could be right back to 300. At the same time, I am not buying puts. I just leave it alone, and I keep that skepticism kind of back there in the back of my mind. We then look at Team, this is one that I know I can do something with, and I would tell you to do the same thing, which is to focus on the bullish aspect of this trade. We've got to acknowledge that we have made a little bit of an extension, right? I just like to point these out because it was one of the toughest things I had to learn in the beginning of my trading. If you step back on this weekly chart, and if you're a dedicated student of Fibonacci, you're going to look at this and say it has had a weekly close above your extension. So that extension should be removed, and you should continue on the path of the trend following trade. I would generally agree with that. But I just feel like since it was so tough for me to learn in spots, I like pointing it out to other traders. Just acknowledge that maybe it's a little extended off of that time frame. If we're okay with that, you should be buying it, right? And you would be buying it against the rising 50-day moving average. I like kind of repeating these things too, because then if I, turn you loose after today's discussion and you're out there and, it's down big, or maybe it takes a couple of days, at what point do you kind of start cutting these ideas or think, hey, maybe I'm not right? If you start closing below the 50-day simple moving average, that's when you have to reevaluate. But, Team right now is $6 above that. So give it $6, $7 of weakness. Let it come in a little bit and then play that with the overall prevailing trend. I'll tell you the same thing, right? When you're trying and really think, all right, which direction do I want to trade this? Look back at the monthly chart. Which direction is that monthly chart going? Yes, there were significant corrections inside it, but the overwhelming momentum is higher. I also think, look at Team and where we have a lifetime high of 191.72. Doesn't it want to get up to 200? You know, in time, it should get up there and hit that psychological price point. So, you know, just follow the rising moving average, and I think Team will make you some money. I'm actually in this one and taking some heat on it. You know, it's manageable, but you kind of look at it and say, and this is why when you brought the question up, it's like, I'll look at that with you. All right, you're down a little bit, but remember that the bid ask in these markets is at least a couple dollars wide. So you're going to take a little heat. Let it give some of that back and forth. Also notice that I have not sold anything in the front month. Right now, I'm just buying calls in the back month. And you can do this a couple different ways, but this is the bigger debit that I'm going to work for that longer duration swing trade. And ideally, I get to sell some puts at some point this week to help take in that credit. I would look to do that if we hit the rising 50-day. Hey, my pleasure, Jeff. Thank you guys for being here this afternoon. I'll do 2 more of them here, and they're actually 3. Because I like gold too, and then AMD and PayPal. Of the 3, PayPal is going to be the one that I have the least amount of input. Just not a chart I've spent a lot of time on lately. You can see my last drawings on this would need to be cleared, and I have traded it before, but kind of in this nosebleed, kind of like, oh my gosh, right? 80 all the way back to 160. I just have to let it breathe, and it's just not setting up for me right this second. But then you have the other 2 markets that were brought up, and this will kind of be a nice way to round out this afternoon's broadcast with what are the state of the markets? Buy AMD and buy gold, and don't look at them again for the next 5 months. You know, I'm thinking, and it's of no political affiliation whatsoever. It's just that during an election year, you're going to tend to see a more buoyant market than in non-election years. So that's just why I keep thinking, kind of run these ideas into the end of, or into the, the beginning of November. And then ideally you've made enough throughout the year that you can just, call it quits and enjoy Thanksgiving and Christmas. That is what I'm going to try to do. But with that being said, I tell you that because I look at these charts like AMD, and this weekly is just getting ready to dominate into higher prices. I enjoy telling people that are brand new to this and maybe haven't studied this that you do not have to take my word for it. Look at these past examples. Look at the way right back in here, and I'm looking at the period, would have been about August of 2019 is where that weekly squeeze began compressing. Okay, it took a couple of months. But look at the way that signal really drove the move from about 25 up into 60. Well, now you have the same signal forming. So it could last much longer, but I think that you buy AMD today, tomorrow, Thursday, you do it to a degree that you are not worried about the money. So just put whatever in it and forget about it. And then let's come back and look at it end of October. And I think you're going to find that AMD is at much higher prices. And then the last one, which I think does do a pretty good job of kind of rounding this out, is saying if you don't want to be just in pure equities, I totally get that. And I think being bullish in gold is another good prospect. The problem with gold is that it can become a liquidated product when there's a liquidation crunch, which is to say everybody just liquidates it, sells everything they've got to raise cash. Do you see this right there through March, right? When equities were really getting hammered, gold just, it kind of explained this to everybody that may have not been familiar, but you can see how it punishes traders that thought that was the safe haven opposed to equities. Ultimately, what was the trade in gold? It is still higher, right? That was a lot of volatility and really did shake a lot of people quite hard. But now, look at where the consolidation has all been just above that price point. You have this spike high into about 1700, the huge sell-off, and now all of this consolidation just above 1700. So I really think that gold is something, at least for me, I have done better by buying, the little bits of bullion that I could tolerate and not looking at it. Don't just get into it where you're buying it here and then you get flushed out at 1690. Stick with it. Try to see the trade through, and that'll serve you well, I think, up into 2162, and then probably not by the next time I do the next Facebook Live, but hopefully at some point I'm doing this with you guys, and we're looking at gold at 2465. Look at that pattern. I don't have my drawing tools right this second, but you can see kind of this rounded bottom, it's kind of a cup if you wanted to call it one. It's a cup that doesn't quite have a handle. Like if it were to pull back, however deep, that could form the handle, and then you look for that rush up into about 2,500. So that is my big picture outlook for gold. I'm pretty dead set in the opinion of it, and I would just try to hold it with risk that I was comfortable with. So yes, and a lot of these, and like in AMD, and to kind of finish these thoughts, I am giving you this analysis and this opinion of about a 5-month outlook. Now, and also remember that when we began today's session, I was telling you there's a way of thinking over the next 4 days, and that's more theta positive, selling premium, working, the witching, expiration. All right, then, the next couple of weeks after that could be kind of messy, but when you look at these patterns and you try to think, this is also why I enjoy doing the big picture stuff in these broadcasts, because I won't probably see you again on this for another month, maybe more, but, in that next month, I think you see this stock higher. So the day-to-day can be noisy, and try to not let yourself get shaken out in the pursuit of the bigger move that is underway. And I think AMD is an excellent product for that discussion. So I hope that was helpful, guys. Thank you so much for joining us for I believe this is the second Facebook Live that I've had. We started with those 4 key, Tesla, Twilio, Peloton, and Nvidia, and then hopefully some other good stocks and concepts that you can apply to your trading in the weeks ahead. So have a great rest of your afternoon, and I hope to see you in the next Facebook Live.